In a lot of the conversations I have, I'm talking about traditional mortgages, which are the traditional FHA, VA, and conventional. But in case you didn't know, there's a whole variety of non-traditional mortgage, and we're going to take a deeper dive into those today. Okay, so today I'm joined by Stacy Flanigan with Angel Oak. And Stacy's going to talk to us about not just the non-traditional mortgages, but she's kind of going to give us an overview of what they are. So Stacy, thank you so much for joining me.
Thank you for having me. I appreciate it.
So we're going to take a look at the traditional mortgages, the non-traditional mortgages, and you're going to tell us a lot of the areas where those can be a big help.
Okay, sounds good.
Okay, so first, let me just explain. The traditional mortgages, we call them QM mortgages or qualifying mortgages. That's kind of an industry term. So if you hear a QM or a non-QM, QM is referring to your typical FHA, VA, conventional type of loan that goes through Fannie Mae or Freddie Mac. But the non-traditional, Stacy, what is that exactly?
So basically, it's everything that doesn't fit into the qualified mortgage. It's non-qualified mortgages. So for instance, portfolio loans that we do that don't fit into your conventional realm are qualifying somebody off their bank statements, or jumbo loans, or non-warrantable condos. So if you have a loan that doesn't fit into the conventional realm, now you have the opportunity or the access to still qualify these borrowers on a non-traditional route.
So a non-traditional route might be something that you look at when there's an income situation, or possibly a credit situation, or maybe even a property situation.
Exactly.
We were talking recently that the condominiums have been such a big issue in the traditional market because of, well, the whole Surfside collapse and all of that. So we're requiring a lot more documentation, starting just with the initial questionnaire.
Correct. But we don't have that new addendum that conventional now requires you guys to fill out for the condominium complex. So if you have an HOA that won't fill it out or doesn't answer the questions that Fannie Mae wants it, then you can look at, again, going a non-traditional route, which would be like an Angel Oak, where we have the non-QM programs.
So probably one of the biggest things I think that people don't realize is when you're not fitting into that nice little traditional box is that you're usually talking about things that are going to require a higher down payment.
Yeah, it might be a higher down payment or a higher interest rate. But again, it's because they're not fitting into the conventional. We're not backed by Fannie or Freddie. So we don't have that government backing. We can't offer those rates. So if your borrower is qualifying off the deposits in their bank statements instead of what they have on their tax returns, well, that's a great option for them because obviously, we'll get into a deeper dive with the bank statement program. But it's a great option for them. But because it is a riskier product, qualifying somebody off of the deposits going into their bank statement, they are going to have maybe a little bit more skin in the game or a little bit higher of an interest rate.
So on one hand, people look at that and go, oh, well, I don't want to pay the higher interest rate. But on the other hand, it allows them to get into the game that they couldn't get into at all before.
Absolutely.
So I think that's an interesting thing because a lot of people don't realize that if you don't fit into that perfect little box, there's no option for them, and there actually is some options. We just have to think a little differently, and so does the borrower.
Absolutely. And education. We need to educate the loan officers like you, and you're educating the realtors to know, don't stop with, oh, I'm sorry, I can't show you any more houses. There are options out there.
Awesome. So we're going to take a deeper dive into some of those products in a couple of other episodes. We're going to do 4 episodes total, this one, and then we're going to talk about what other programs?
Bank statements, no income cash flow loans, foreign nationals.
Oh.
Yeah.
So you've got a lot of different products you're going to take a deeper dive and really share with us.
Absolutely.
Thank you, Stacy. Can't wait to hear the rest of the story.
Thank you.
Thank you for watching, and please stay tuned because we're going to take a much deeper dive into each one of these topics. Thanks for watching. See you next week.